What is up, everyone? All right, so what we are going to cover today is a trade that the team was alerted about in the chat room. This trade is CHGG. Now, what we have here is we have a pretty strong uptrender, right? So when we look at CHGG, from its inception, it is a strong uptrender. And like, you know how I trade here, I like to keep things very simple. I think that price action, while other indicators are very, very important to certain strategies, I think price action is the basis and the foundation to any type of successful trading. And in order to truly understand other indicators, other strategies, you have to master price action trading. And to this day, I believe price action trading is the best way to trade. It is the simplest way to trade, and it is the most intuitive way to trade. And with that said, one of the very important parts to price action trading is understanding that taking trades in the direction of the trend is your best bet to having a profitable trade. So what we're looking at here is we are looking at a long trade on CHGG. What we want to notice here is that from its inception, CHGG has been quite the uptrender. All right, now that gives us information regarding the continuation of that trend is most likely going to take place. So when we pull this up on a chart, what we're looking at, and what I'll do is, as always, I always like to, when possible, put the actual alerts that were sent out to the team chat room, because I want you all to understand that, look, if you understand this stuff, if you master your psychology, you master your strategy, you truly understand risk management, you truly understand what's going on in trading, you can use it to make money. I want you to understand that. I want you to see that it is possible. So I always, when possible, like to put up the alerts that took place in the chat room, so you can see that these things happened before the move happened. All right. And once again, if you want to join the team, we would love to have you on there, as long as you are a dedicated student and serious about learning. I like mentoring those who are serious about their education, about improving their future. So that is always available to you guys as well. But anyway, so continuing on, what we're looking at here is we're looking at this level right around here, like 29.80, 29.75-ish. Now, this is an important level for a couple of reasons. As you can see, this is, at the time, if you move this chart even back further, right, this is an uptrender, and it puts in a high, and then it pulls back, and it puts in another high at the exact same level, right, touches it exactly perfectly, but it does not break, right? So usually when you have a trend, you get breaks, right? That's what continues on. But as you can notice here, a lot of times this stock likes to put in double tops before continuing on. So what we have here is we kind of have a double top, right? And then we have a move down, and then we have a move into this area again. All right, so almost like a triple top, basically. So what do we know here? At this point in time, we knew that, one, we have a very heavily uptrending stock. Okay, stock, forex, cryptocurrency, whatever you're trading. All right, you guys, I want you to understand, I talk about stocks a lot, but in the chat room, we trade forex, we trade cryptocurrency, we trade stocks, options, stock options. And the thing is, when you're talking about pure bread and butter technical analysis, when you're talking about the fundamentals, not fundamental analysis, but the fundamentals that make up good trading, all right, and the foundations to trading, they're useful across the board. So whether you're trading forex, you're trading stocks, understand that this stuff is going to help you and be beneficial to you. So what do we know at the time? The asset, I'm going to say asset, or the security, because I want you to understand that you can use this in other things. This is a stock, but the asset or the security that we're looking at is uptrending, all right? And then what we also know is we have a level that is holding pretty strongly. Now, on top of all of that, what else do we know? What else do I usually use here a lot, quite frequently? I talk about whole number support and resistance. And if you look how close this level is to the 30, if I can line this up perfectly. But basically, we have a level that is perfectly aligned to the 30 level, right? So basically, you have an area of resistance that is holding, not just because it's an area of resistance and you have high volume sellers that are pushing this down, or you have basically a switching of control from the buyers to the sellers every single time that this stock reaches this level, right? Why does this happen? So let's break it down psychologically. Why does this happen? Okay. Well, what happens is at this level, anything below this level, people think it's a good buy, it's a good deal, it's undervalued. When you come into this level, for some reason, people are starting to see this as either overvalued or a place to sell. So you have a flooding of sellers. Then what you have is you have buyers regaining control, because anytime it's under this level, it is in buyers or in the market's mind a decent deal. So then you get another push. But every time it reaches here, you get sellers flooding the market. All right. Why do these eventually break? Because as you can tell, since we want to take an uptrend, this is going to break. Why do these break? Usually, I'm not saying all the time, but why do they break for the most part? It is because every single time you have sellers flood the market, you start to run out of sellers. All right, you start to run out of sellers, and as long as you have a continuation of buying pressure, eventually this level is going to break. But so that's one of the main reasons. The other reason is because of this psychological level of $30. This is called whole number support and resistance, and it is a very, very real thing. All right, if you have a lower price stock, you're usually looking for the like the $1, $2, $3, $4, etc. level. Those are going to act as support and resistance. The stock is going to either run into resistance at those levels, or it's going to find support at those levels. When you start getting into the $20, $30, $40 stocks, or whatever you're trading, I don't want to just say stocks, but anything that you're trading, then but I do see this a lot in stocks. All right, I do see this a lot and mostly in stocks. So what do you start seeing? Then you're starting to look for the 10s, right? So the $10 level, the $20 level, the $30 level, the $40 level, right? Those are going to act as psychological support and resistance. And then once you're starting to getting into the high-priced assets, like say Apple, which is 100, what is it now? It just crossed $200. Then you're looking for the $100, $200, $300 levels that are going to act as a level of support and resistance. Not only that, on Apple, it also just became a $1 trillion company. I believe at around $203, it was the first $1 trillion company. So in a sense, that is also going to act as resistance, that $203 level. Now that it broke, it's going to act as support. Why? Because when that $1 trillion mark is, in a sense, going to act as psychological resistance. People sell during those big milestones. People buy on the other side of those big milestones. That's why when you look at Apple, the moment it crossed 200 and the moment it crossed being the first $1 trillion company, it went up quickly. That is because of those psychological levels. So I want you guys to understand that support and resistance is not just about price action, or an area where you have high volume sellers or high volume buyers, or an area where an asset consolidates. All right. Support and resistance is also about mentality, and about levels that are psychological in people's minds to mean something to a lot of people. If a level means something to a lot of people, it will act as support and resistance a lot of the times. So that's a little side note. But anyways, so we have this level here. We have this $30 level. And then, of course, what happens, we get some price movement, right? Like right here and right here. These both broke that level. And they definitely broke the highs right around here, right? So we get a break, but we don't get a close. Now, remember, this is on the daily. For those of you who are new here, there is swing trading. There is day trading. Day trading usually happens on a smaller time frame. 5-minute candlestick charts, 15-minute candlestick charts, sometimes 1-minute candlestick charts. All right, and then swing trading, which is a slower form of trading, happens on usually larger time frame charts, 4-hour charts, daily charts, weekly charts. All right, I like both. They're just a little bit different. Day trading is fast-paced. Swing trading is a little bit slower-paced. In this case, in this instance, this is a swing trade, because each one of these is a day. Each one of these candlesticks represents one day. So we had a couple days where it broke, but it did not close above the two levels that we're looking at here. Now, you could technically, when you get that break, you could technically trade it and hold it. I personally look for usually a close very close to above the level, because I like to have extremely tight stop losses. This allows me to have basically my R to R fixed risk trading, which I'll talk about in a second. It allows me to have basically not need such a large move in order to get my 1 to 3 or 1 to 4 R to R that I'm looking for, right? And I'll talk about that in a second. So as you continue forward, we get that break. And then over the last couple of days, we've had a nice solid move up, actually crossing all the way into the highs of 31.29. So this stock moved from 29.80-ish all the way to like 31.29. So 29 to 30, so that's about $1.50, 60-cent move. if my math is correct here, yeah, 29 to or 29 to 30, and then a little bit above that. So now, what do I mean by a fixed risk? Well, there's a couple of ways to trade, right? There's a lot of people trade with basically what's called exit, basically what's called like an exit signal, right? And basically what an exit signal strategy is it means that there is a reason why you're exiting the trade. So just like there's a reason why you're entering the trade, there's also a reason why you're exiting that trade. Whether that be you see a consolidation, you see an area of resistance, prior resistance, you see whole number resistance, potentially you see an area of consolidation or a drop in volume, whatever it may be, or you start to see the stock or asset roll over. There's a reason built into your strategy of why you're exiting. That would be a signal-based exit. And I have nothing against that. Sometimes I use that with whole number support and resistance. But I personally like I like the form of trading which is known as fixed risk trading. That means that if I'm taking, for every one unit of risk, I want a certain amount of reward in order to compensate for that. All right. So for example, if we're using a 1 to 3 R to R, okay, that means a 1 to 3 risk to reward. So for every 1 unit of risk, I want 3 units of reward. Now, what is a unit? A unit can mean anything. Now, the way that we calculate our unit is based on our stop loss. So if we're entering at 30, right, we're entering at the break of 30, and let's say our stop loss is under 29.80, right? So we wait for the break of the $30 whole number support and resistance, right, to enter, and then we put our stops below the double top highs, let's say at 29.75. So we have a 25-ish, 26 cent risk. All right, so let's say we are looking for a 1 to 3 R to R. Since we have a, let's say, 25-cent risk, we need to take that risk and we need to multiply that by 3. That gives us a 75-cent reward that we're looking for. So what we're looking for is we're looking for the 30.75 level in order to get out, which would be right around here. Does that make sense? Because if we're taking 25 cents of risk, we want 3 times that for our reward. What does this mean? Why is this important? Well, if our reward is 3 times larger than our risk, that means we could technically take 3 losses in a row, only be right once on the 4th time, and break even. So what does this mean? That means that if we're trading with a 1 to 3 R to R, our accuracy percentage could technically be 25%, and we would still break even. Okay, excluding your commissions. Obviously, commissions are going to be much more important with this smaller position size or a smaller account. All right. So, keeping that in mind, but simplifying it, we just basically need 1 winner out of every 4 trades in order to break us even. Does that make sense? So that means our accuracy could be 25%, and we break even. So anything above 25%, and we're making a profit. Now, do you think you can be 25% accurate? That's the question that you have to ask yourself. If the answer is yes, then guess what? You can make money in the market. So a lot of people chase those high accuracy strategies. Don't get me wrong; there is nothing wrong with those, and in a lot of the instances, those are a good way to trade, especially if you have a lower R to R. But if you're trading with a high risk to reward, your reward is 4, 5, 6 times higher than your risk, then you can be very low accurate and you can still make money. All right. So a lot of people, if I told most people who didn't understand this, if I said, oh yeah, I have a 35% accurate strategy, they're going to say, wow, you suck at trading. That's because most people don't understand that accuracy is only, I see accuracy and risk to reward as basically a scale, 2 sides to a scale, right? Accuracy is only one piece of the puzzle. Right? If let's say my strategy that I'm using is 40% accurate. Okay, most people are going to say that's pretty low. That means out of every 10 trades you only win 4. But if I'm trading with a 1 to 3 R to R, or if I'm trading with a 1 to 4 R to R, that means I only need to be accurate 1 out of every 4 trades. Or with the 1 to 4 R to R, I only need to be accurate 1 out of every 5 trades, only 20% of the time. All right, so that's just that. Anything above that is profit. So a lot of people need to understand that R to R is very important because it shows you, it kind of gives you a peek into how accurate you need to be in order to be profitable. If you're more profitable, or excuse me, if you're more accurate than that, then you have a winning strategy. Simple as that. So now don't get me wrong, some people trade with 1-to-1 RR, 1-to-2 RR, 1-to-3 RR, 1-to-4 RR, 1-to-5 RR, 1-to-10 RR. It just depends on the strategy. So what we're saying here is this is a beautiful trade. It's a very simple trade. If you take a 20-cent risk, you got all the way up to 31.20 or 31.29, basically 31.30. So that's $1.30. That is about 6 times. So you could have technically had a 1-to-6 R-to-R trade here. All right, and you would have actually been stopped, or you would have actually been taken out for a profit based on a 20-cent stop loss. So excellent trade in the books. Really good trade, and it's a very simple trade. It's just an uptrending stock that breaks, right? Uptrending stock that breaks higher, all right, and breaks out of a resistance zone and continues the trend. Now, what are we looking for here? Well, we're looking for a couple of things. Either A, this is going to continue. This is just going to continue higher, right? Right. At that point, we're out of trade. And we just watch the stock, wait for the next potential trade. No big deal. Here's the other thing. Once you're profitable, you're profitable. Just ignore it. A lot of people, they take a trade, they're profitable, and then they see the stock or the asset move higher, and they say, oh, I should have held longer, blah, blah, blah. Look, what you need to focus on is being profitable, not trying to squeeze every little cent of profit out of every single trade. Focus on being profitable. Focus on a strategy that is continually profitable. Now, if every single time you're leaving money on the table, well, then you want to go back, you want to test your strategy, you want to see if you can adjust it to squeeze more profit out. But there's a fine line between trying to squeeze every little bit of profit out, or understanding that it's all about being profitable, consistent on a consistent basis, and not worrying about what happens after the trade. So this could go higher, I could care less. This could also retest this level, and this would set us up for another trade. All right, this would set us for another trade, because if we get a retest, this level, right, this level here is currently, or was before it broke, was resistance. So this may very well act as support. Do you see how that works? So this is a secondary trade that we could take right here for a possible continuation higher. So if it gets into this level, once again, this is another place where you possibly could take a trade. All right, you guys. Hopefully this was helpful. Hopefully this was informative. Very simple trade. CHGG is the ticker. And as always, we love having, if you're serious about trading, and I gotta always make a warning, because I was about to say, well, we love having new members on the team. We love having people in the trading mastery course and in the team chat room, and that is very, very true. I love having people in there, but I have to warn you. I want people who are serious about learning. So if you're serious about learning, if you're serious about actually mastering this, if you're serious about being around people who care about you and a mentor who cares about you and you want to learn, well, in that case, absolutely. But for those of you who are kind of sort of, lazy and don't really, it's very difficult to mentor people like that. I want to mentor people who are serious about changing their lives, are serious about learning a skill that they can use, are serious about this, are serious about just being successful in general, because unless you are serious about being successful in general, you will not become successful. All right, so get serious. Buckle down, hunker down, get serious about your life. And if you're that type of person who is a go-getter and who wants to go out there and absolutely crush it, go to the next level, take it to the next level, take their training to the next level, take their life to the next level, and seriously become successful in life, those are the people that I want on my team. So if that is you, then definitely join the team. If that is you, then definitely join the Trading Mastery course, all right? But only if that is you. This is Derek. This is Finance and Chocolate. Until the next video, continue to trade smart. See ya, everybody.